Order filled long. That was odd the way that did that. Filled long on a 151. Failed break lower. Right at 6,700 here. This ought to be interesting. It looks to me like that's going lower, not higher. Prediction is long though.
Order filled.
Order filled long now on a pretty that's actually a break signal, 141, right at the overnight high, and now it's scratch, so not scratch but at first target, so moving to entry -5. And we're gonna have to break that high to get to scratch.
Order filled.
All right, 5 tick loss. So that's pretty painful. Get stopped out to the almost to the tick
Order filled.
on a, and then I'd be at scratch now and in a position long, and now the system actually is predicting a failed breakout short. So now I'm short. So that you can see how the dominoes will fall there if you get too aggressive with that stop management. I'm not clear here how this is going to work out. Stop is up there. All right, so now that's it. Entry mine now it's at scratch. So had I not gotten stopped out long, I'd be out for some small gain and not in the market short, is what it would be the case. And so let's just see what happens. And the reason that it's important is that when you take the stop, you immediately start critiquing and evaluating, and you kind of just don't know what's going to happen. And it's useful to step back and go, now wait, we don't know what's going to happen, because this could work out really well for me. I mean, I actually sat here and said when I got stopped out here, all right, and then the market started climbing, I went, oh man, this is going to hurt. And yet that's actually working out better in terms of the amount of profit I'll make, even if it stops me out here on this pullback. It'll still have been better. And if it rolls over and hits that lower target, well, that'll be much, much better. And so, just I think the message there is just let the system do its job and then look at the result, because you don't know what's going to happen. And there's a cluster of ones there that suggests to me the market's going to turn. 6:45 now. So the other thing we were chatting about was starting at 6:35 versus 6:45.
Order filled. Placed.
And still short again. That's interesting. And so far, initially it was looking like, gosh, starting at 6:35 was bad. Then it was looking like, okay, no, it's good. Now we'll see if it's going to end up just being the same. I get stopped here. Uh, 285 is a failed pullback long, I think. Where's my cheat sheet? Yeah, it sees that pullback long right there and says, no, I think this is going to fail. Looks like that prediction's wrong though. So as it turns out here, if I started at 645 instead of 635, it would, it's about the same today, except for costs. So there it is again. Stopped out to the tick, so that really hurts. The sucker's gonna roll over for me now. There's nothing you can do about that. You just gotta let the system. That's a function of using a tight stop in a volatile market, and choosing to trail. We're still trailing pretty aggressively, even with moving it to -5 at +10. So there's another quick, really painful stopped out to the tick here on a really nice entry. So this is turning behavior, but prediction is failure, and then you get in at that's a really nice entry, but the market is just whippy enough that it takes me out with my 10 tick stop. So a couple here now, there and there. All right, so we're in this is what we. It's interesting because when the markets are normal, and then you start to see this, and the volatility is increasing. That's when we talk about, okay, the volatility is going up. Increase your stop size to deal with this issue. As opposed to like recently, the volatility just went off the charts. And when that happens, doubling your stop just doesn't help, because everything's just gotten so unpredictable. It's interesting. This is more kind of what you see in sort of a normal increase in volatility. Okay, double your stops and targets, and then just do what you normally do, and you deal with this particular kind of behavior. That this issue goes away. Not doubling your stops and targets now doesn't make sense to me, because the volatility is so high that everything's quite a bit less predictable, and so you end up just losing twice as much on those days when you just get whacked like that. Let's record this. So yeah, I'm headed in that direction where what I want to do is you really want to be in the market here, and then these are ads. That is an ad. And that's an ad, as opposed to just a single contract. But I'm just not there yet. I'm starting to get the model stable enough and understand how all this works. The problem is I don't know how to do that in the spreadsheet study for Sierra chart, so I have to learn all that. But this is a good example of, the machine learning system picked the absolute top. This is just this is truly an unbelievable entry. I think not a trade I could ever have taken as a human. But then, the trade management stops me out here, and then the new signal, which is also. That's also correct, and the market's turning. Just there's enough volatility in the market that my stop is too tight. I get stopped there, and then again it happens twice. So, as a human, if that's happening to you, you end up starting doing really incredibly stupid things, and then losing money because of it. So, but anyway, you taking a step back as a system developer here, I'm really happy with what I'm seeing. All right, I found the peak. I found 2 great ad points. I'm just not set up to do those ads yet, and I'm not set up to trail the way I'd like to trail. I typically trail it as a zigzag, so I trail to here, to there, and then once we talk about this. We used to talk about it, right? Is that you got to let that pullback happen. And only then do you move the stop. This has to happen, this piece here. And then you move the stop. And so the zigzag is a really good way to see that. There are other ways you can do it, but the simplest way is just use the zigzag. So you can see, normally we would just not move the stop. You get to scratch, so you have your stop sitting up here. This would be normal trade management. Get your stop sitting up there, and then wait for the zigzag, and then move it to here, to right there. And then if you haven't hit your target, wait for the next zigzag, and then you're moving it to here. All right. So some members don't even have a target. They're just letting it go. You're just trailing to the zigzag, or they'll get X amount and then they'll start doing like a 3-bar trail. So it would be, as this here, we didn't actually get a zig, right? And so after what is that, 20 or 30 points, they start trailing by 2-3 bars. So you just start dragging it down behind the bar as they complete. And so the stop had been sitting right there, and they would have got taken out right there. So that gain would have been 67.12 to 66.81. Pretty nice. All right, that's the move you were looking for. You could stop for the day and be happy with that result. Okay, so some refinements there that we're going to need to add as we get as we move forward. As I get the machine learning piece dialed in here, I'll start focusing on trade management. And I've got members that are actively doing stuff as well, so we can use the power of the community to improve that as well. So short in the NQ again, but we're not going to get filled before that cancels, because it's going to cancel when that second bar finishes drawing, and even if it closes up, it'll cancel just like that. A good example of a market order would be better. I didn't do that test. I didn't do the test to see if you're just better off with the market versus limit. That would be a really good test to do for the December-January time frame using the 2017 model. I did it early on, to the very, very beginning when I was initially developing that spreadsheet, trying to figure out if I needed limit orders or market orders. But once we got to that, sort of well understood set of settings for the NQ with, the noise filter of 4 and these set of codes, I need to redo that test with market orders. Because if that happens a lot, then you're missing out. Well, we'll have to see. Put on the list. Oh shoot, I wasn't recording here. So that behavior we just saw, where you get filled, and then the market will it'll make this quick little move back to the entry, even after it gets to 10 ticks or so. And so I was seeing that a lot, where we were moving the stop to entry +1 at +10, and finding that the market makes that little vacuum pop move and stopping you out really quickly a lot. And so that's why now we go entry, when you get +10, move this stop to entry -5 to deal with that. So it happened right here again, where you're at +10 right there. Our entry was here, right? And then the market pulls back. Do you see that? It was that quick little move you saw. And so when you're moving to entry +1, you just get stopped out, and then you miss the nice move here. So entry -5 does that. So ultimately, just looking at today, right? Looking at the awesome fill there, and then these correct adds here, right? Ultimately, what we want is at +10 move to -5, at +20 move to entry +1, and then trail to the zigzag. And then after that, do an add with the trail to the zigzag. So there's really sort of two separate things there. So that's hitting 20 points or +80 Let's see if I got out too soon. I'm just laughing because that's a nice trade, right? But I'm irritated that I've missed, you know, two other nice trades there I missed because of this business here, this getting stopped out of the tick. All right, so order placed long in the NASDAQ and long in the ES. Not filled here. Anyway, so the benefits of giving the market more room to work are huge compared to the number of times where you give back more than you'd like. Right, but it takes time for you to realize that. And when you're watching it day to day, you're watching a trade and you see that you gave back more than you'd like because you were trailing more loosely. You end up upset and not wanting to do that, so you trail more aggressively, and then when these really nice moves come along, you miss out on them. You get taken out too soon, but then more importantly, you end up taking new trades because you're not in the market now, and as a result, every time you take a new trade, that's new risk that you're taking, and you don't want to do that. What you want is you want to get in up here like I did. You want to get in here or here and then just hang on, because if you get out, any new trade is new risk that you're taking. You're now in a position where there's no risk in these trades, right? Because you've got so much profit built into the trade. Okay. Anyway, something to think about. The reason it's on my mind even more is that I see, you guys have this tool now, and I see you using it to optimize and understand at a particular day what would have been best for that day, and that's a good exercise to go through, but you can't stop there. You have to take that set, like you saw me do in the video last night, and now go back and test it for 2 months or 3 months. And then you understand, okay, this is a good set of codes and settings to use, and then just use that. And then when something happens using that you see that's suboptimal for a particular day, your job now as a trader is to step back and use that knowledge from the test run over a long period of time to help you deal with the emotional response you're having to whatever bad thing happened that you didn't like. All right. So if you optimize for a single day, you're going to sub-optimize for the whole, but your goal is to optimize for the whole. And so there's a war going on inside of you between your intellect and your emotional response, and you need ammunition to help fight that war, and that ammunition is data. Here's another case here where I got stopped out by a few ticks. Rough day for tight stops.